Hello and welcome. You're watching Business Today TV. I'm Sakshi, Batra, and this is Market Today, a show where we'll help you understand all the latest cues on the street in terms of the benchmark index moves, the sectoral action, and the stocks that are buzzing in trade as well. And we'll also get you expert views to find out really how should investors be really putting their strategies in the stock markets now amid a whole host of changes in the macro and the micro environment as well, and which are the sectors and the stocks that you should keep on your radar as well. We'll quickly first look at how the benchmark indices are moving and what is the overall stock market reaction to several news flows that we are getting right from the early morning trade. Well, it's a mixed screen that you can see as far as the benchmarks are concerned. The Nifty is hovering just about 17,070 odd levels, 7 points down. It's a very marginal negative, flat with a negative bias is how the Nifty is really moving. When you talk about the Sensex, that's hovering at 57,948, just about 26 points up in trade, flat with a positive bias. So both the benchmark indices are flattish in trade right now. When we also look at the broader markets, there's a deeper cut. In fact, it's the small caps that are down by 0.6% or half odd percent cut for the mid cap 100 index. Even when we talk about the market breadth, there are 31 stocks in the declining side, which indicates that the market breadth is shifted towards or tilted towards the declines at the moment, with most of the declines coming in terms of the sectors from the metals pack, from the PSU banks pack, and also from the realty stocks as well. Realty stocks which are down by almost 1%, and the metals that are also weaker in trade by 1.4% decline is what we can see here. Rest of the sectors slightly up in trade. IT stocks finding some strength amid a lackluster movement in the overall market scenario as well. The stocks that are really putting pressure on the markets today, Adani Enterprises, that's down by 2.5% as the top loser on the Nifty index. Hindalco, Tata Steel from the metal pack losing their sheen. Bajaj Twins continue to decline about 1.5 to 2% odd. On the positive side, you do have some of the IT stocks recovering slightly, with Infosys, TCS slightly up in trade today, over 1% odd. Tech Mahindra also following suit, 1% up in trade. Apart from the IT bigwigs, we have Apollo Hospitals that's been continuing its upward run, and also Kotak Mahindra Bank that's slightly up by 1 odd percent in trade today. But time now to welcome our guest on the show. Mr. Abhishek Basumallick joins in. He's the founder at Intelsense Capital. Welcome, Mr. Basumallick, and thank you so much for taking the time out for this discussion. I want to first take an overview on the markets as to how do you read the current sentiments flowing in. We've seen the big event of US Fed pass by, and the markets have been volatile after that. Of course, we've also seen fresh worries in terms of the financial crisis emerging in the last 1 week or so. The Hindenburg report, again, another target on the global front. So that's given some kind of a relief to the India Inc. CEOs for sure. How are you looking at all of these scenarios really play out for the Indian markets per se?
So I think nothing has changed for the Indian markets over the last 1 month, 2 months. It's like 2 days it goes up, 3 days it falls. Uh, it's basically a grinding market, right? I mean, nothing much is happening. There are stock specific or industry specific reactions on a day. Then a couple of days the market falls and it goes up. So nothing really is there's no predominant trend, if I may call it that. It's just going sideways with a slightly negative bias. Nothing much to read into the market as such.
Okay, understood that. But the big news that's making headlines today is the amendments to the finance bill that we have seen. Finance bill has proposed some amendments, and one such amendment is related to the mutual funds and the debt mutual funds per se. The amendment says that with up to 35% of equity exposure in mutual funds to domestic companies, especially the debt funds, are liable to be taxed as per the investors' income tax slab rate as well. This brings the taxation treatment for debt funds on par with any other fixed deposits, where the capital gains are added to the investor's income and taxed at his or her tax slab rate as well. How are you looking at these kind of changes? We are also looking at how the grandfathering will not be extended to market-linked debentures. Also, debt mutual funds held for more than 3 years will no longer enjoy the indexation benefit as well, won't be eligible for 20% tax rate. So more or less it will be treated as short-term capital gains, and we've removed that LTCG benefit from the debt mutual funds. How do you look at this kind of an amendment? What does it mean for the mutual funds and for the investors of mutual funds at large?
So it's a very significant and serious uh, impact to debt funds. There's no two ways about it. Uh, Today, with if this bill passes, which is probably expected to, if it passes without any changes, then it takes away the tax arbitrage that debt mutual funds used to have, and it brings it at par with something like a plain vanilla FD. So going forward, that is a significant dampener for people who invest in debt mutual funds. Now, there are two implications to this from the AMC perspective. Obviously, they will lose out on a lot of AUM in the near future. Uh, that money that was being parked in debt mutual funds. Now, a part of it will come back through maybe balanced funds, etc., uh, which will get deployed into equity. Now, the income that AMC earns in equity funds is slightly higher than what they earn in debt. So, whether it will compensate for the losses, or the reduction in revenues that will happen from the what business will go away from debt funds remains to be seen. Net, it is going to be negative for the AMCs. And
Okay.
for common people, I think it's now at par with FDs and other avenues available. So why would somebody now go and do a
Exactly.
choose one over the other? So now it's a even
Sure.
playing field for all instruments.
Sure, understood that, and that is of course another matter, and it's a long. It calls for a longer show where we can actually take in, a lot of aspects of this, and really help investors to really chart their investments in the new financial year, because this will get implemented from the 1st of April 2023. So then they can decide on where do they want to invest, but that's for a separate show altogether. Right now, if we are talking about the stock market reaction to this news, we are also seeing the AMC stocks really slip away after as a knee-jerk reaction. Stocks like Aditya Birla AMC, HDFC AMC, UTI AMC, and also Birla AMC, they're all slipping away today. Your thoughts, and how should investors be really approaching their investments in these particular stocks, those who've been holding these stocks for long?
Basically, you need to reevaluate the thesis, understand how much of the income is coming from debt versus equities, how much of it is corporate, how much of it is retail. So that kind of granular study needs to be done and taken a call on. So it is inevitable that some amount of debt fund, money is going to flow out of debt funds. So there is going to be a pressure on AMC stock prices for the near future. No doubt in it.
So fresh investments, are they warranted, or till the time dust settles down, there are other things that the AMC companies really decide to garner more profits from the other segments rather than and reduce their exposure here. So some more time before we go ahead and pick up these stocks?
See, if you have a very long-term view, right? If you want to build a decadal kind of view, then AMCs are actually not a bad place to park money, because financialization of savings in India has just started. And typically when a young person is starting his or her career now, uh, one of the first things that they do nowadays is to start a mutual fund SIP. That's what I'm seeing around me, and that trend is actually picking up. So uh, over a long period of time, I think this is going to be a good business. The only thing that you need to figure out is, whether you want to, you know, wait for a little bit more time till the dust sort of settles, or you can actually do a sort of create a small basket of stocks which will benefit from this financialization theme, and then keep adding a small increment of money into that basket every month.
Sure. Okay, got it. There's another big news that I'm just getting as we speak. Sources have actually spoken to Business Today, and the information that we are getting is that India's Life Insurance Corporation is planning to impose caps on debt, and equity exposure to companies. What we have also come to know is that LIC is now planning investment caps after the criticism of its exposure to Adani Group. This is as per sources, but Mr. Basumallick, your thoughts, initial comments on this kind of a news flow? What does it really mean?
It doesn't mean anything. Any good financial institution which which works as a fund has these kinds of rules and regulations in place. Uh, I'm sure LIC would also have them. Basically things like sectoral caps, individual stock, allocation caps. Maybe they are revising it, but I'll be honestly very surprised if LIC did not have it uh, in place before this. Everybody does.
What
Globally,
does it mean?
it's
What
a
does it
standard
mean for
practice.
investors of LIC
Doesn't mean
and
anything.
for the share?
Doesn't mean anything. I mean, it's a normal operational practice. I mean, if I'm running a fund, I will have guidelines in place which will say that I don't want to invest let's say more than 10% in a particular stock. I don't want to invest more than say 20-25% in a particular sector. So those kinds of caps are there as guardrails so that from a risk management perspective,
Okay.
and every fund house, whether it's insurance, whether it's a mutual fund, whether it's PMS, everybody would have something like that. So nothing new in this.
Okay, understood that. I mean, like the news flows that we are getting is that the caps, once approved by the LIC board, would also further limit the insurer's exposure. Currently, the insurer cannot invest more than 10% of the outstanding equity in a particular company and 10% of the outstanding debt as well. The IRDAI also bars insurers from having more than 15% of their investment funds in equity and debt of companies owned by one corporate or one promoter group. Now, the move perhaps is aimed at strengthening the investment strategies and fence LIC from any public criticism. And that's perhaps is what we are getting to understand as of now. We'll continue to track these more developments as and when perhaps we get more details on this front as well. We've definitely seen how the finance bill amendments are going to impact debt mutual funds. So investors of debt mutual funds, this is an important update for you. Continue to speak to your financial advisor and understand as to how should you proceed onto that as well. We'll get you a special show onto that. But let's also move on to the other part, and that's the IT stocks, which we're going to be discussing today, especially because there is some kind of a recovery in today's trading session. IT stocks are finding some strength in a lackluster kind of a trade that we've been witnessing overall, but the stocks have been reeling under pressure because of course there was some recovery in the earlier part of this year, but that could not sustain, as we did see several other issues come up, especially with the financial crisis in US and in Europe as well, and with the IT sector's exposure to BFSI segment. About 40% of revenues come from that. There is fear that perhaps there could be order slowdown in this segment, and perhaps the impact of this BFSI could also trickle in into the other segments as well, and perhaps the earnings may reflect that in Q4 going forward. I wanted to understand from you, Mr. Basumallick, today we've also seen, apart from this kind of a financial crisis, we've also seen how Accenture has also lowered its guidance for revenue and profit going forward from here, and has also announced 19,000 people layoff as well. Do you see this as part of a bigger picture and bigger trend playing out for global IT majors and for the Indian IT companies too?
Absolutely. And if you remember, I think we've been discussing IT on and off pretty much for the entire last year. And I remember telling you earlier that most of the time what happens is that, the crisis or the problems come to the fore 2 to 3 quarters after it actually starts, surfacing. Because, and this is my personal experience, right? Management somehow tends to be in denial mode, or either they are in denial mode, or they just don't come out in public and say that things are bad, right? And this is, I've seen this time and again, probably 4 or 5 times now in the last 3 days. Now, having said that, if you see this Accenture move of cutting so many jobs, and a large part, unfortunately, will those job cuts will happen in India, because as they have indicated, the highest number of recruits that they had done over the last 2 years was in India. Now, if you see the reaction to the Accenture stock price yesterday in US, the stock was up 7.2%. Right? Now, why is that? The
Hmm.
simple reason is that once if you look at it from the company's perspective, or if you look at it from the services industry perspective, there is now the balance of power, so called, is now tilting, or now has tilted towards the companies. So in the last 1.5 years, you are all seeing news in the media about companies having very high attrition, companies having to pay a lot more salary, etc.
Yeah.
Now you will see the exact opposite cycle starting to play out. You will see attrition come down sharply, because people are now going to get, the employees are now going to get scared. They are now going to want to just, sort of latch on to, or hold on to their jobs. So increments will freeze, and that is going to again impact the cost. So in, if you look at the overall impact of this, uh, the margins are likely to now move upwards from here, which is going to boost the overall IT prospects. Now, what is going to happen in US, Europe, primarily US, which is the largest market for Indian IT companies? That is where the top line movement is going to come from, and that, in my opinion, will remain muted for general IT services companies for the next 2-3 quarters. For specialized companies, people who are working in, let's say, the ER&D space or those kinds of areas, that is where I think a lot more traction is going to be.
Hmm, hmm, hmm. So, how do you advise investors of the IT stocks to really approach their investments now in light of all of these, the financial and the banking crisis, and now the slowdown concerns, the layoff concerns?
I would say IT is now at a place where, you can start, or if you have positions, you can, hold on to them and start building up slowly for the next 2-3 years. Looks like a good place, and things will start stabilizing from there.
Okay, okay, understood that. Now, there's another big news that's coming in, and that's again from the finance bill amendments. I wanted to take your reaction on that as well. And this one looks big for the FNO trading segment as well. Finance bill amendments do suggest that the STT on the sale of options has been hiked to 2100 rupees on a turnover of 1 crore rupees. An earlier applicable levy was about 1700 rupees. And on the sale of futures contracts, the STT has been hiked to 12,500 rupees on a 1 crore turnover, as against earlier, which was a levy of 10,000 rupees. And on the option side, the STT is charged on premium and not the strike price as well. That's an information for sure. But is it going to be a big impact on the traders? I mean, the price hike right there.
So again, you have to take my views on this with a pinch of salt, because I am not a very keen participant of the FNO market.
Sure.
See, the challenge is, FNO primarily is just very, very speculative now. The actual hedging, uh, which is, done for portfolios, is probably a very, very minuscule part of the market. The primary volumes that happen is all speculation, and obviously, when you are speculating, it is like you are getting, a lot of people who are speculating are practically addicted to it,
Hmm.
right? So this is like, taxing cigarettes or something like that. It's free money for any government to take. People who are going to, do FNO trading will continue to do it. Small fee hike here and there is not going to make a material difference. People are going to be very upset about it. They're
Hmm.
going to write a lot on Twitter and other social media about it. But will they make any meaningful changes in their trading patterns? I doubt.
Okay, just for more clarity to all the viewers right there and all of those investors of FNO segment, income from trading in derivatives is really deemed to be a capital gain for the FPIs. But considering the fact that STT is not deductible expense for computing the capital gains income, can this move increase the cost of operations for HFT foreign portfolio investors in India as well?
I'm not very sure. I'll have to read the fine, the
Okay.
fine print and understand what exactly has changed to actually, give you a meaningful, answer to this.
All right, understood that. Well, the markets have now slipped further in the red, 57,867 for the Sensex and the Nifty hovering at 17,048 at this point in time. We'll leave it at that. Many thanks, Mr. Basumallick, for being with us on the show and touching upon various topics of discussion in today's market scenarios. Of course, a lot of news flows which we had to take care of. We will continue to touch base with you to understand more insights about the markets going forward as well. But the markets are showing some kind of a downward reaction, perhaps to the finance bill amendments right there, and the stock markets are showing some indication, early indication of that. We'll have to keep an eye out on how the markets progress from here. 2.5 hours remaining for the markets to shut shop. How do they proceed from here on? Is there a deeper, correction that we do see because of all these amendments right there? We'll keep an eye out on this. So to track all of this, you should also stick with us on Business Today TV. Don't forget to subscribe to this platform and also continue to engage with us on our other social media platforms, that's Facebook, Twitter, LinkedIn and Instagram. Until then, many thanks for tuning in. Are you planning an international vacation in the upcoming summer holidays? Well, here are some very